Welcome back, traders. In today's video, we are diving into an insightful and simple to understand analysis of the US all spot through a comprehensive price action perspective. As we explore the recent price movements and chart patterns of this commodity, we will uncover key insights that can potentially shape our trading decisions ahead of the new week. And since this is going to be a follow up detail to my previous analysis, I would like to share with you some of the key moments we had during the course of last week, which gave us a significant amount of profit on this commodity. And talking about last week's trading session, the week started with a simple flat channel where we identified price action ranging between the $73.55 and the $73.05 area, which happens to be around our key level for the week. And we had our sell stop order below the structure, which was initially triggered and giving us our first sell position for the week. And throughout the first half of last week, we saw ourselves selling the US oil commodity and even adding more positions at the breakdowns of key structures that we identified. So it was more of selling the US oil throughout the first half of the week. However, at the beginning of this month, we begin to see some choppy situation go on between that range between the 69 and the $67.50 level, which made us to anticipate a potential reversal pattern. So we position ourselves above the $69 area with the hopes that price action will break out that structure at one point to trigger an opportunity to buy. And this went on for about 24 hours before we saw the breakout happen during the later part of the New York session. And we rode that move all the way into that $71 level, waiting for more opportunities, as you can see here. And I think, okay, we also added one more position at the breakout of the 71. And it was at this point during the last trading day of last week that we saw choppy situation continue between the $72.20 level and the $71.60 area to give us an indecisive channel ahead of the new week. If you do want to have a review of how we took advantage of these opportunities, don't worry, I will be dropping the link to this commentary in the description box of this current video. And if you are watching this from my YouTube channel, then definitely you will be seeing the link to this commentary at the top right hand side of your screen. So, with that being said, here let's dive right into the business for today. So, in order to plan ahead of the new week, I've been able to identify a simple setup which has a sweet spot that I think will determine how price action will be going for the new week. But before I go into the detail here, I would like to call your attention into what has been going on in this market since the second week of the month of April. And as you can see here, price action has actually been on a bearish momentum. And to further emphasize the strength of the sellers, you will see that we have a descending channel after connecting the lower highs. But something interesting is going on in this market. Despite the fact that we're seeing lower highs, we are yet to get a lower low in this market, which wakes up the idea of a potential bullish momentum at any point in time that could break out of the bearish trend line. And the demand zone here at the $68 area between the 68 and the $67 level has been a major determinant of buying power since the beginning of the month of May. And as you can see, every attempt by the sellers to break down the structure has been met with strong resistance from the sellers, from the buyers rather. And this also happened at the beginning of the week to maintain a bullish momentum here. Now, if you look at what is going on and look at how last week's trading session ended, you will see that price action is back along the trend line that has been supporting this bearish momentum so far. And another thing about this whole structure is this bullish trend line during the month of May. We saw attempt by the buyers to do a breakout of this range as we saw higher lows here. And when we connect the trend line, you will see that during last week's trading session, we saw the breakdown of the structure. And in fact, this also fell in line with our technical expectation. That is, whenever price action breaks down of a key structure like this, we expect that price will come back, retest that structure, and if continued selling pressure happens, it might likely incite a sell-off in this market. So at this point, you will agree with me that we are at a critical point, and in order to position ourselves ahead of the new week, have been able to identify a key level which we are going to be using to guide our trading activity for this week. And this key level here is situated along the $72 level, which also has been a level that has been a major determinant of price action throughout the month of May. And one interesting thing about this key level is that it shares a sweet spot with both the bearish trend line and the bullish trend line that was broken during last week's trading session. So at this point in time, our decision on the US all spot is mainly going to be centered around this confluence here, as if price action breaks out of the $72 level with continued buy pressure above the structure on our lower time frame, this will be an opportunity to join a bullish momentum where, depending on how price action reacts to the $74.50 level, will determine if we are going to be buying or selling again. After that, when we get to that road, we are going to cross it. Then another thing here is that if continued selling pressure happens below the key level, respecting the trend line one more, the bearish trend line one more time, and even retesting the bullish trend line that was broken last week, then we might likely be seeing a bearish move. And depending on how price action reacts to this demand zone, will determine if we are going to be buying, that is, if we start seeing buy pressure around that area, or if we are going to be selling if we sight a breakdown of this demand zone. So these are the things I'm going to be looking forward to in the coming week. And another thing I would like us to also keep tabs with is that the OPEC Plus started a meeting yesterday, that's on Saturday. And I think by now the meeting should have ended, but I'm yet to get an highlight in that regard. So I think with time goes by, I will get an highlight and I will be giving you an update during our morning live session tomorrow. So this is what we are going to be looking at on the US All Spot for this week. And trust me, I'm going to be with you in the comment section of all of my public platform after monitoring how participants in this market will be reacting to this current structure in this market. I hope this video has been of immense help in making your independent decision on the US oil commodity. And if you found this video helpful, kindly support this project by clicking or giving this video a thumbs up, and by hitting the like button. Your likes are very valuable and they help the video reach more people who may find it beneficial to them too. And if you haven't already, I would love for you to subscribe to my channel. By subscribing, you will be notified whenever I upload new videos, ensuring that you never miss out on the latest updates. So, on this note, I wish you best of luck this week, and I look forward to seeing you right in the comment section of these videos during the early hours of the week as we get prepared for the new week. Thank you for watching. Thank you for liking and subscribing, and do have a wonderful evening, everyone. Bye bye.